Rhinos, Dr. FJ. So I want to talk today about insurance, not like health insurance in the office, about your insurance and how you're going to insure yourself. And there's two basic different types, term and whole life. And I want to get into that because you need both. They're both very, very important. Buy term and invest the difference because a really popular mantra made by A.L. Williams like 40 years ago. And because people weren't using whole life insurance the right way. So it's really important to know how to use it to maximize the benefit. But whole life insurance is incredibly powerful. And some policies allow you to have both term and whole life, or you start with a term policy and then you slowly convert it to whole life as your needs change. But term is exactly what it's designed. It's exactly insurance, right? So what you're going to do is you're going to buy probably a 20 to 25 year term. And you need to get this. If you have a small business, if you have a family, it doesn't matter. Everyone should have this because if you die, they get a nice big check that can allow them to survive, especially if you're working and your spouse isn't. Gotta have this. Got to have this, all right? So you're going to buy like 20, 25 year term. What that means is I started right when I opened my business 9 years ago, is if I die over those 20, 25 years, and I think at first I started with just a $500,000, now I have $4 million, but I've also started slowly converting to whole life, but the payout would be the same. So my wife, Corey, would still get $4 million if I were to die. But you're going to pay, and that's why term is very cheap. Because if you're healthy, the chance of you dying over that 20 to 25 years is very, very low. If you're, say you're 30, chance of you dying before you're 55, very low. You'd have to get hit by a bus or something. So you can pay a few $100 a month, and you can get literally millions of dollars in coverage. And that way, if something were to happen to you, your spouse gets this money, and now they have a chance to survive, okay? So term is true insurance. If you don't die, you get nothing back. Nothing, okay? Now, whole life is different. Whole life is more like a checking account with awesome interest, okay? So whole life, you put this money in every month, every quarter, every year, and then it accrues interest and has an awesome interest rate, usually 4, 5, 6, 7, 8% interest. If you're doing it personally, it's tax-free. You've already paid money on that you've already paid tax on your money. You brought that income home, and now you're buying this policy with post-tax money, so it's tax-free. Okay? And it just keeps accruing over those years. And then when you die, you have this death benefit, your children get this huge amount of money. Now, it takes time, right? Or you have to have a huge policy. So the problem is, years ago, people were taking tiny whole life policies. They weren't overfunding them. And so then they die and the family would get $12,000. Or if they died only after the policy had only been there 2 years, then they get nothing. So whole life, you need whole life and term. And you need to understand the differences in what they're providing. Okay? Whole life, if you start it and then you die in 18 months, it's not going to do anything for you. Term, once you sign that policy, you start paying, you die 2 months later, you get a $500,000, a $2, $4, $5 million check. Okay? But if you go to 25 years, don't die, you get nothing back. Whole life, you go 25 years, and now you start getting some real money. So the key with whole life is you got to overfund it. In the beginning, most of the money goes to pay the policy. All right? So, and you got to be able to make the premium every month, quarter, year, whatever it is. So it's really important. It's better to take a smaller policy and overfund it. And remember, most financial planners are going to shoot down this idea. Okay? They're not going to like it. They want to get in that market and invest the money and boom, boom, boom. So most financial planners will shoot this down. But as a small business owner, whole life insurance is brilliant because you can give your business a loan and it can pay you back with interest. You will get charged interest when you take money out, but as long as you're paying yourself back more interest, you win. And now you've started the banking system that a lot of people talk about. Okay, so that's how I got the loan for my business. My father took money out of his whole life policy. I opened my business. I paid him money back with interest, so we all won. Okay, so you've got to overfund it. Again, like with my kids, I think I took out a $2,000 a year policy, very small. It's only like $160 a month. Then I overfunded it for another, $70, $80 a month. So now that $70, $80 doesn't go to the policy. That goes straight in that account and it starts getting that tax-free compounding interest. So that $70, $80, it's getting that 5, 6, 7, 8% tax-free. And then that, becomes $150, and then $2,000 and $3,000. And go look up what compounding interest does. And that's why this is so powerful, is the compound interest. Okay, so overfunding it is key. It's extremely liquid, like I was talking about, which is really nice. If you get in a pinch, you can take money out. If one quarter you couldn't make your premium for whatever reason, you can take money from the policy, pay the premium. You usually get it within a week or two. So then you can pay that policy, keep it going. So it's very liquid. You can take money out, and again, when you do, pay yourself back with interest. Okay. Now, some people have so many policies, some they don't even pay back because they have so many. So that's more advanced stuff. But in the beginning, just get a couple policies, make sure you make the premium, overfund. And again, it's tax-free interest. I just want to write that. Tax-free compounding interest. It's massive, at a high rate. 4, 5, 6, 7, 8% interest tax-free. Can't beat it. Okay? So, and again, now if you can do it with your business too, which can be a great tool, but again, that's paying pre-tax money. So then when your children, whoever takes over the business, or whoever's running the business when you pass away, that money they get will get taxed, but then they're still going to get a huge amount of money that either they can take personally, they can reinvest in the business, make the business debt-free, or if your accountants you say it's better to keep a little debt, then you can buy some new equipment with it, whatever you need. But now you have this huge chunk of change, and you're starting to build that wealth. I'm dead serious about creating 10,000 millionaire chiropractors. We need thousands of millionaire chiropractors, and then we can make real change. But to do that, we've got to do the little things to get wealthy. All right, then we can take over the CCE, then we can take over the schools, and we can really make real change. We'll have massive leverage, but we've got to do the little things. And this is what the massively wealthy do. One of the tools they use to continue to pass on that wealth to their children. Okay, and you can take out little policies for your kids like I did, and when they're 30, there'll be like $200,000 in there, so they can take it to buy their first house or start a business or pay for school, and then you pay the money back little by little. Everyone wins. And now you're not a slave to the banks. It's still a good idea to have a bank and have a line of credit and things like that, but this is another tool to create financial freedom. Now you need the term, right? You need to protect yourself in the short term, then whole life, you create the wealth and the freedom long term, okay? But again, overfund it, make sure you can make the premium, loan your business, pay yourself back with interest. I do think eventually when your business is crushing, it's a good idea to get one for the business. That way the next generation, if you pass, then your children will have that wealth. They can use that to pay your spouse for the business. So use these tools. And again, there are a lot of companies that offer, you can convert term into whole life. So if you were to die, unfortunately, really shortly, your business gets a huge chunk, or you personally get a huge chunk, and then it little becomes whole life. And the dividends eventually will pay the premium. Once you've got enough money in there and the interest is accrued enough, the money you get from that interest, the dividend, that distribution you're getting from the interest, you can use to pay the premium. And then you got to talk to your financial planner, because you can only overfund so much, or then you move into a mech, and it's a whole nother issue. But they'll know that. So again, use these tools, guys. Protect yourself, but then also create the plan to create real wealth and freedom long term. Keep charging.